I'm not looking for the same gains they had last year. So let me say that to you. I don't think there's a triple digit return in it again. I've said since getting involved, I thought because it was a round number, $100 for silver, 5,000 on gold. I think we're going there. We may even get there sooner than I expected. But I think once we get to that level, then we have to ask ourselves, what can make it double from there? And all I can come up with at this time, my friend, is this: a lot worse problems than we're currently facing now. And then I ask myself, is it going to be worth it? Is it going to be worth it that my silver doubled again, but now life has become so hard to live with, it's more than taking away the gains? I don't know that yet. We're not there yet, but I do think that if we are going to play this market now, the leverage comes in the share. Yeah, they may double still from here, gold and silver, but if they do go up that level, oh my God, the mining shares will 5 to 10 times more return than a double.
Veteran investor Peter Grandich says precious metals could still reach psychological milestones of $100 silver and $5,000 gold, but he cautions investors not to expect another triple-digit annual return. Grandich argues that for metals to double again beyond those levels, global economic conditions would likely deteriorate significantly, raising questions about whether such gains would even be worth the cost to everyday life. At this stage of the cycle, he believes leverage lies in mining shares, which could deliver 5 to 10 times returns if gold and silver continue higher, far outperforming the metals themselves. Now, we present the clips from Peter Grandich interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
For many years, I treated silver as second class. In fact, when I was a money manager and I'd be speaking at a conference and the silver bugs would ask me, well, you love gold, what about silver? And I say, well, silver's like kissing your sister. And they get very angry and all. But thankfully, early last year, when it briefly went under 30, I really got an education from one of the smartest people I know ever. And it made me see how much the silver market has changed and how much more industrial use is in it. And the spread had gotten so wide, approaching 100 to 1 the ratio, that you just had to own it, which I did. And then I said, given what it's done, it could lead gold for the rest of the year, which it did. It's still not in the same exact ballpark monetarily. I don't think it will ever be. We're not seeing those same central banks loading up on silver. At least we don't know that they are. But for all the years of decline that we've seen and all the exhaustion of above ground supply and this renewed interest as an investment, separate from all its industrial use, is why we're seeing what's happening here. Plus, there were people that played the real short side and suppressed it. I used to get abused that it was an organization, they're still around, Gatter, and we were used to be outspoken at shows, and we used to have to battle one particular guy that would call us kooks and all this kind of stuff. But it's clear and evident now to people that this has been a severely suppressed market, both gold and silver. And I think what you're seeing is the unwinding of that. And I think as much as people say that, oh, we had a quick washout down, I don't think they're going to go back into that same position. I don't think they feel they got the control anymore because they lost the physical market. And that's what comes back to bite them. And so I would say I'm not looking for the same gains they had last year. So let me say that to you. I don't think there's a triple digit return in it again. I've said since getting involved, I thought because it was a round number, $100 for silver, 5,000 on gold. I think we're going there. We may even get there sooner than I expected. But I think once we get to that level, then we have to ask ourselves, what can make it double from there? And all I can come up with at this time, my friend, is this: a lot worse problems than we're currently facing now. And then I ask myself, is it going to be worth it? Is it going to be worth it that my silver doubled again, but now life has become so hard to live with, it's more than taking away the gains? I don't know that yet. We're not there yet. But I do think that if we are going to play this market now, the leverage comes in the shares. Yeah, they may double still from here, gold and silver. But if they do go up that level, oh my God, the mining shares will 5 to 10 times more return than a double. It's just an enormity of what how it flows down to the bottom line. And thankfully, while not on fire yet, still, the junior resource market is still of interest, but it still has that competition of where people used to flow into it have gone other places, especially crypto. I am certain that money that's currently been in crypto the last few years, if crypto didn't exist, some of that would have found its way into the junior resource market. It hasn't. What we don't want is a crash in the stock market or crypto because it won't have time to switch. But we are starting to see people now. And the reason I knew it is because the crypto cult, I call them crypto nuts because they're a cult. They're not looking at it objectively. They're now saying, oh, silver is top and this is going to make Bitcoin. That's just a pure hope.
Once dismissed as second class, silver has reemerged as a powerful investment as industrial demand surges and above ground supply tightens. After gold silver ratio neared 100.1, the case to own silver became unavoidable, leading it to outperform gold. Years of price suppression and heavy short positioning appear to be unwinding as control over the physical market fades. While triple-digit annual returns may be unlikely, psychological targets of $100 silver and 5,000 gold remain plausible. Going forward, the greatest leverage may lie in mining shares, which could dramatically outperform metals amid shifting capital flows from crypto to resources. Let's get back to the interview.
The physical market has changed dramatically. Back in 2011, that was more of a paper-driven rise of the gold market. The physical market, which used to be virtually controlled 100% between London and the US, has all but blown up for them. It has moved to Asia in a powerful way at a time when those people in the world are using the physical metal for the reasons that one would think you would want, not these groups that used to manipulate and sell forward and do a lot of things. Some people think there's derivatives out there that might have been sold 3 or 4 or 5 different times on these things. The physical change and the physical demand. And what moved that physical demand was what we just talked about earlier. That part of the world looking to form and be away from the United States, not be counting on the United States to trade, etc., and going to use gold in one of their methods or more on how they're going to trade by themselves. A few weeks ago, we saw the introduction of this unit, not going through a test phase, but clearly something that's moving forward. Gold will be a part of however they make their payments to each other. So that was really, really a critical factor. The other thing that's been really bullish that people have not recognized is that we're now seeing the people who treated for 40 of my 42 years, Wall Street treated gold like kryptonite. They never talked about it. They never suggested it. For my years, even back to the money management days, but clearly in the last 25 with a planning group, I would sit with people and say, listen, I want you to buy gold and hope it doesn't go up. And they almost all did the same thing. They looked like that puppy that didn't understand what you were trying to tell it. And they turned their head and go, Mr. Grandich, I don't understand why you would want me to invest in something that you think is not going to go up. And I would say, well, based on the fact that you have all these financial assets, if it does go up a lot, chances are what you own a lot is going to go down. People never gave it the time of day on Wall Street to be included in a portfolio. We've now seen three major financial institutions in the US talk about making it part of the 60/40 portfolio. Now would be 60% stocks, 20% bonds, and 20% gold. Gold is finally and well, well overdue being viewed now by so-called mainstream, not yet to where it's raving and everybody's flocking to it, but it's no longer being knocked and thrown about and treated like garbage. Look what this Bitcoin group or this leader sailor in the last 3 or 4 years his whole argument was get rid of, not only was it bad advice to tell people to sell everything they own, stocks, bonds, real estate, and all that kind of stuff, and borrow money and buy one product, which no one should ever do, including just for gold. But remember, his biggest single target was gold. It's a relic. It's useless. You should be out of it. So what has it done since then? It's gone up 150% while he made those claims, and his product is traded like this, in between, two levels and all of that. So there is a much different tone overall to it at a time when, and this goes into more of the other metals and base metals, when a lot of money was not spent looking for new deposits. It's an industry that since that time, you said, was really in survival mode from 2012 to maybe 2023. They basically were in survival mode, especially from 12 to about 18 or 19 until gold started, they start approaching 2000 the first time and all. And this is place in the world now where you can't just go anywhere and look. 25, 30 years ago, we could spin the globe, a finger can land anywhere and say, we can go there. Half the world is no longer viable as far as major mining companies are concerned for the risks, social, political, economical combination of all of them. But on top of all of that, we're finally, and I mean finally, seeing mainstream Wall Street analysts being willing to look at gold producers, uranium producers, not yet the little juniors, way down on this level and all, and start to realize that, hey, you know what? With $6 copper and $4,500 gold, their cash flow is, remember, unlike other industries, gold producer or whatever major metal you want to talk about, they're very vanilla. They got two main big costs: energy to get out their ore and people, wages. Both of them have gone sideways to down for them. And there's nothing on the horizon to send that up a lot. Yet the price of what they're looking for keeps going up. So their earnings are just going to keep going like this, while earnings are now going like this for the general market. So there's only going to be more of a traction for Main Street, Wall Street to look at the metals and mining industry here in 2026, in my opinion.
The global gold market has undergone a dramatic transformation, shifting from a paper-driven system dominated by London and the U.S. Rising physical demand reflects geopolitical realignment as nations seek alternatives to U.S.-centric trade and increasingly use gold in settlement mechanisms. At the same time, Wall Street's long-standing dismissal of gold is fading, with major institutions now integrating gold into portfolio models. Limited new mine supply, rising metal prices, and stable production costs are driving explosive cash flows for producers. As mainstream analysts embrace metals, gold and mining equities are entering a powerful new investment cycle. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.